All right. Good morning and happy hump day. Our Wednesday live stream. We do it every week. If you're new here, welcome to the live stream. Typically, what we're going to do here is we're going to live trade today. We're going to use our custom indicator to live trade and show you how it works, go through it, answer questions about it, answer questions about the market, give you updates, all those types of things, and have a little fun too. I hope when it gets boring, I try to crack jokes and see if you guys will laugh. Probably not, but I give it a shot. So, um, like I said, welcome to the live stream. We are about a half hour from the open. So let's kind of take a look at overall what we're doing here today. So I created an indicator. It's called IWJ Pivot Point Pro, and it is a trading view indicator. You can see I'm in trading view right now. And um, it's a very, very simple indicator in the sense of how to use it. You get a buy signal, you buy. You get a sell signal, you sell. And um, we use it for day and swing trading. And it takes over 170 inputs and calculates what it expects the market to do based on those inputs. And then it spits out a buy or sell signal for you to use. Now, most indicators say you have an RSI indicator. Well, that's giving you the RSI. You have a MACD indicator. Well, that's giving you the MACD. You have a volume profile. Well, that's giving you volume. They all give you one thing. What we did is we took all of those things that matter, like volume, like key levels, like RSI and MACD are part of it, but there's more important things, honestly. And we packaged that up into a scoring system, if you will. So a high volume area at a key level might weight higher than, say, the RSI or MACD, because the high volume level is going to be more forward looking, whereas the MACD is going to be more backward looking. And we want to be at the bottoms and tops of the market. And the only way to do that is to be forward looking. So it creates a score, basically. And when that score hits a certain number, this is all happening in the background. This is just the technicals. You get a buy signal or a sell signal. And those signals tend to do really, really well. Now, it does have a few rules. On trend days, we don't trade, and I'll show you how we identify trend days here shortly, because we may have one today. Who knows? Pretty big sell coming in right there. We don't trade on trend days because the indicator is looking for counter trend movement, and it's looking for reversals off of key levels, and it's looking for criteria that meets that standard. And on trend days, we don't get reversals off of key levels. The market blows through support and resistance. It may bounce or reject for a minute, but ultimately grinds right through. And so trading against the trend doesn't make any sense. We're looking for more locked in days where we have a defined range, and the market's trading back and forth in that range, and we're crushing off of those trades, and that's generally what happens. So we've had back-to-back record months, and overall just an incredible output from this indicator. We are, give me 1 second here. For, trying to find the screenshot I have. I believe this is it. My computer's giving me a little bit of a issue here. Was there a tweet or a data release at 9? That's a pretty good sell candle for a 5-minute candle. One second here, guys. One thing I was going to say today before the market's so aggressively obliged is that statistically today is a negative day. It is a day you would look for the market to be in the red. Very often we will find that when Man, that's a big gap. Yeah, there they go to fill it. Very often, when all 4 days of Halloween, Beazle, where am I? All 4 days of Thanksgiving week are green. Then the Monday, Tuesday, Wednesday of the following week tend to struggle a little bit, and Wednesday tends to be negative, and then Thursday and Friday tend to be positive. So we'll see how that all plays out here. Give me 1 second here, guys. I might have to. Give me 1 second. Just a quick computer issue, and we'll be done. Potentially. I swear. Morning, Maxime. Morning, Shocker. Welcome to the stream. Trying to get something going here. 1 second, guys. There we go. All right. So here's our November results. We had 26,900 on 50 contracts for November. That means we trade 50 contracts per trade. You don't have to trade that many. This is just what we trade based on our account. We started with a 100K account. Our profit just for this year is 83,750. It was 30,000 last year. So we started with 100K. We're over 100K in profit in just about not quite 2 years. So we are, coming in to the end of December here, and that would be 2 years. So over 2 years, a 100% return on investment using the indicator is pretty solid in my book. Hopefully you guys agree. And it's really just, if you follow the rules, it's really a incredible tool to help you understand entries. I mean, even this pre-market entry was great, but we don't trade the pre-market. So a couple of the rules, just so you know, we don't trade trend days. We stop trading at 1 p.m. Eastern Standard Time, 10 a.m. Pacific Standard Time. You can figure out the difference from your time zone, but basically we trade for about 3.5 hours because that is the morning session, and that is when the most movement occurs and where they attack the levels the most and where you're going to find the best trades. By the time we get into 1 o'clock, you have post-lunch boredom, you have algorithm trading, and you have choppy behavior most of the time, so we don't trade those. The last rules we really have are you just got to use proper stops and exit when appropriate. And use proper stops, exit when appropriate, and then take profit at the key levels. 1 second here. Sorry, guys. This has been a little bit of a session. So that's it. It's pretty basic, pretty easy to use. And right now, guys, we have extended our Black Friday deal because I got it out a little late last week. So there's a link in the description right now. You can get, normally the indicator is $59 a month. Right now, you can get it for $39 a month. Not just the first month, just $39 a month. And I'm also giving you my advanced Elliott Wave course. It's $147 and price action trading $67. So that's $273 of value for $39 a month. So if you want to take advantage of that deal, there's a link in the description. It will take you over to the webpage that you can do that on. This will not be a deal you get to see again until maybe next Black Friday, but we are extending it for the week since a lot of people didn't get to see this. And I wanted to give you guys the opportunity to take advantage of that deal. So make sure you go over and sign up for that before the end of the week. Something to do with Microsoft and AI quotas being unable to fulfill or the like. Oh, some kind of AI news. I see. Okay, well. We were looking for a negative day today anyway, so once again, the news doesn't matter. I was just curious as to what the catalyst of the move was. Andy Bennett, good morning from the UK. Good morning. I wish, well, UK is my favorite basketball team and football team, University of Kentucky, but I know you mean the UK overseas. You got to be doing better than my basketball team, that's for sure. Welcome to the stream, Andy. Slime time. Isn't the ROI much higher considering you deploy 50 contracts? How much does that average? It's not 100K. I'm not sure what you mean at all. The overall ROI, we started with a 100K account, and in 2 years we are at 110 or 210. So I mean it's 110% ROI, I guess. But it's, I mean, that's, I guess I don't understand what you mean about the 50 contracts and stuff, but each trade might average, or each trade might average, you know, I don't know, over the course of the month, each trade might average 1% or something. I'd have to look that up, but once you compound all those for a month and all the trades we make, you know, we make 50, 60 trades a month. You compound all that, and that 1% adds up pretty quick. So, not sure exactly what you mean. At any given time, you buy 50 contracts. Yes, and welcome to the stream, Slime time. Yes, all trades, unless options prices are really high. So if you saw in Matt's comment there before I deleted it, you can go back and check it out. He talks about a few trades at 25 contracts because on those days volatility was high and the options prices were like $3. So when options prices are really high, we cut our order size in half. But for the most part, yes, 50 contracts. Now we started at 25 contracts. So last year when we started doing this in 2024, actually we started at the end of 2023, but those first 3 months of that, or last 3 months of that, I just used as beta testing, so I didn't count those. But starting on January of 2024, we were trading 25 contracts on a 100K account. And then we made enough money on that in October of this year, in September of this year, we switched to 50 contracts because we had made enough money to justify moving up our contract size without risking too much of our capital on any given trade. So that's the power of the indicator as well, is if you're starting, let's say you only have 10K to start and you don't have a 100K account, you know, you can trade 5 contracts, and then when you get to 20K, you can start trading 10 contracts, and when you get to 30K, you can start trading 15, and so on, or however whatever fits your risk tolerance. You can adjust that to any bankroll size. You can trade 1 contract if you have only $1,000 or something. Sam, good morning. Welcome to the stream. So let's look at structure real quick. We were looking for a rejection here. So far, we're seeing some small rejection. But this big line here across 6,900, huge resistance. They came up to it here. The true top is 6,900. This line here is at 6,880, which also happens to be a big level here. And they're rejecting that area. The 764 is at 6,853. And we were looking for this to come down for each path, because off of the high, if this is wave 3 and this is wave 4, we're in an ending diagonal, so you would expect an ABC. So this would be your A leg. You'd look for a B leg down and then C higher like this. That would be the bullish option on the chart. The bearish option are that 3 and 4 are in, so 3 would move back over here, and 4 would move back over here like this, and this would be 5 up here. That's the bearish option. And in that case, the move down is an A leg, right? And the move back up is B, and then we're looking for C down from here. So this drop that we're getting, assuming they can follow through, they haven't followed through anything yet. They got to break down below 6,800 to really get the ball rolling. This drop, we're looking for about 6,700 overall. They start getting below that. Gets a little worrisome for the bulls. 66.25 is the level they need to hold. If they get below 66.25, look for the 6,400s next. and that sea leg to continue. Now there is, if you follow me on Instagram, I have a reel, one reel that went pretty viral about banks and the repo fund and the emergency liquidity meetings they're having. Again, the repo fund is getting huge amounts of money drawn from it, which is saying that banks still are having liquidity issues and that there is a liquidity crisis on our hands. I think that will come to fruition in 2026. But my favored path right now, until it does prove otherwise, is that this is going to be A, B, and C towards 7,000. I think 7,000 is inevitable. I've said that for a while. I said we should hit the weekly 21, which we did down here, and then push back toward 7,000 overall. So that's where my primary path is. I adjust at 66.25. They get below that, and we have to start looking lower and thinking about a potential bigger top being in. The banking industry has plenty of issues, and I think that people are focusing on the wrong market right now, looking for the AI bubble to pop. The banking industry will pop first, and that will cause the AI bubble to pop. Beccatini, good morning. Welcome to the stream. Andy, hi Jacob. I have subs to TradingView already. If I want to use the indicator for live trading, I guess I need live access for certain futures contracts. Yes. So the instructions are in the page when you sign up. I believe it's TV indicator. Invest with Jacob TV indicator. Yeah. So investwithjacob.com/TV-indicator, and it will tell you exactly what you need on this page. You come down and it gives you the instructions. You will need the CME, CBOT, COMEX, New York MEX E-mini included. That's what it's called. It's about $7 a month unless the inflation has gotten to them, but that's what it used to be. So you need this exact live data for the ES and the NQ, or you will not get real-time signals on your chart. And that's a really important factor because, again, most indicators look at like 1 to 3 things. They don't really calculate a whole bunch of information. We're looking at the ES, the NQ, and the SPY all at the same time when you're trading in that box. So if you're trading one of those 3 things, you should have the other 2 set to the other 2 things. And what I mean by that is if you go over here and you look at IWJ Pivot Point Pro settings, ticker 1 is set to ES and ticker 2 is set to NQ because we are on the SPY. Now, if I was on the NQ, one of these should be set to SPY and one of them should be set to ES. If I was on the ES, it should be SPY and mini, or NQ. If I was on the ES, it should be SPY and NQ in here. So we're looking at all 3 of those charts to make sure that they correlate and that broad buying and selling is happening and off of key levels on all 3 charts. So that's how we determine if a level's starting to become a great candidate for a buy or sell. Is 1, is it a key level? On each of the charts, they have their own key levels. 2, are they hitting those key levels at the same time or near those key levels at the same time? Is there volume? Is there buying or selling pressure? Is there the reaction we're looking for? All of those things go into creating a thorough, strong buy or sell signal. Does that mean they're going to work every time? Of course it does not. No indicator is 100%. People need to learn that losing is part of trading, and it's a learning opportunity every time we have a losing trade. I look to see what happened. Was NQ lagging and caught up too late, and ES had already made its move? We've seen that before. Was there holiday trading where low volume kind of threw us off a little bit because the indicator looks for high volume moves to solidify a trade, and holiday trading can be lower volume and kind of mess that up. So we look at losing as an opportunity to learn. It's a part of trading. It is something you must accept and just know that is going to happen. Let me tell you the parts of trading that you must come to grips with if you want to be a professional trader. If you want to trade, and even if you don't want to be a professional, but you want to be somebody who makes enough money to pay his bills or her bills or to pay your car payment, whatever your goal is, here are some truths that you must come to grips with as a trader. Number 1, you will lose. It's why stops and sizing and capital management is so important. So number one, you will lose. Get that in your brain. Number two, you might lose for a week or even a month or even 2 months. Streaks are streaks. The market can be really irrational at times, break all of the rules, all of the statistics, all of the things we come to expect from the market. It can go absolutely nuts for a long period of time and not follow any of those rules, and that will confound everybody and humble everybody. But as long as your sizing and stops are right, it won't matter, because you will win enough to absorb those losing streaks and make money. And that's what we've proven over and over again with the indicator. Have we had losing months? Absolutely we have. We've had probably 5 or 6 over the last 2 years. But if you count 6 out of how many? 24 months. Well, that means we have 18 winning months. And if our winning months are 26,000 and our losing months are 5,000, it kind of changes how you view things. So number one is you will lose. Get that through your brain, accept it, and learn how to manage it. Number two, you will miss moves if you are trading correctly. We have rules. Those rules are in place to protect us. Does that mean that those rules work every single time? No. For instance, if we, like yesterday was a good example of this. They started a trend setup here. So when they got up here and set the trend, we ignored this sell signal and we sat on their hands for the day, because that's how you treat a trend day. This sell signal came and it happened to drop 4 straight points. That's a pretty darn good trade. We missed it because of our rules. And that's because the other 25 times this sell signal came and it did this. And then another sell signal came and it did this. And then another one came and it did it again. And you got stopped out 50 times trying to catch this one move. So you were a net loser, but in your mind, all you see is this trade and say, oh my God, I lost so much money or missed out on so much money. No, you didn't. You saved a bunch of money in those other losing trades, but you don't see that. You just see the one you missed. You are going to miss moves. That is part of trading. Don't get frustrated by it. Don't get concerned with it. It's just what's going to happen. If you start doing that, you're going to get emotional. If you get emotional, you're going to trade like an idiot, and then you will be broke. Emotions are for trading, for dating, not trading. Think of all the dumb things you've done when you're emotional. Made a stupid phone call to an ex, sent a text to a coworker, sent a text to your boss, said something to your wife or husband, your kids, whatever. When you're emotional, you do a lot of dumb things. Even when you're emotional to the good way, when you're super excited and happy, you hit $1,000 in Vegas and you say, I'm going to take 500 and bet it on black and see what happens. That's an emotionally driven bad decision. So you got to keep your emotions out of it. And to do that, you just got to understand that there are days you're going to miss moves. There are times you're going to lose. There are just things that are going to happen that aren't fun. If it was all fun and games, we'd all be rich and everybody'd do it. So if you want to have the discipline to trade properly, those are things you have to come to grips with and just manage and just say it's okay. Because guess what? In 10 minutes, there'll be another trade. Or in one day, there'll be another trade. It's going to be fine. And let's see here. What would I need to ask TradingView to add? It's $7. I just went through it, Andy. If that should have answered your question, you don't need to ask them. It's just in their menu of products. You'll just have to go in and order it. What do you make of the unusually high volume in the pre-market? Let me turn volume back on, actually. We're getting close to the open. It usually picks up right now. I don't know if it's unusual. I'd have to look to see if it's unusually high. I'll take your word for it that it is. But when you get catalysts, that happens. You get people that, or something in the news that drives price, and people pile on because price is moving fast. So I wouldn't make too much of it yet. Let me get set up here. We are about 6 minutes from the open. It looks like we're going to be looking for a buy at the open. Now, if you don't know how I know we're looking for a buy at the open, give me 1 second and I'll tell you. We have a sell up here on the screen, and they have sold down, and they have sold enough to get us through a buying or selling cycle. So we would be looking for a buy signal coming off of this area down here. You also have some high volume support down here. These levels over here, high volume level, 0 DTE, these are options levels. These are where all of the options are sitting and where market makers are likely to defend. Your 1 day minimum is, consider the 1 day minimum and maximum your shorelines. They tend to hold the market most of the time, but I call them a shoreline because the shorelines, we can predict the tides every single day. So we build houses knowing that the tide won't get to those houses. But when there's a hurricane, those shorelines give way and that water comes on through. So if there's a major buy or sell event, they can blow through those levels. But those are really good levels to look at for potential reversals in a given day because the market makers wanted to defend this area extremely hard. And if you want these levels on your chart, it's called Mentor Q. You do have to pay for it. It's not my product. It's the only product, that and TradingView are the only two products I talk about ever that aren't my own. I don't promote stuff just for a buck. I use these things very much, and I like them. So this isn't some me getting a referral link money thing. This is a product that I really do like. But as a benefit to you and me, I do have a link in the description. If you click on that, you can get 20% off of Mentor Q. And then, of course, I get a kickback as well, so we both win. And like I said, they're levels that are really good because this is where the market makers sit. Now, what does that mean? Let's see how much time. We got 4 minutes. I'll do it real quick. So when you buy an option, somebody has to sell that option to you. And most of the people selling options are market makers. And those are the people with all the money. Those are the people who control price or want to control price. And they want to, and they control a large share of the market. Think of them as the bookmakers in Vegas, right? When you bet with Vegas, the casino is the market maker. The casino takes in the money, and then they say, if you win, I got to pay you back money. Well, if you got Kansas City playing Philadelphia and all the money comes in on Kansas City, then the bookmaker is one-sided, and he doesn't like that. He wants it to be even because he collects the juice, and he doesn't really care who wins the game. So he'll have to bet on Philadelphia to match that Kansas City bet. Well, that same thing happens here. This is HVL 0 DTE is a high volume level, and it's options expiring today. That's what 0 days to expiration is. And if price is above that level, then the market maker has to buy calls to match the level of calls that are already there. So if there's a whole bunch of calls here and price moves above this level, then the market makers who sold all those calls are underwater. So they have to buy calls, okay, to balance their position, just like a casino lays off when they have too much on one side of a bet. They have to buy calls, and what does that do? That creates a squeeze, and that pushes the market off of these levels very strongly. Put support, that's where your big put wall is, meaning below this level, they have to pay a whole lot of puts. They don't want price to get below that, so if it does, they have to pile in and buy puts themselves so that they can hedge against their losses that they would take when price gets below that. So they defend these levels very strongly because they don't want price, in the case of puts below, or in the case of calls above that level, because that costs them a lot of money. So they'd much rather price stay between the call 0 DTE and the put 0 TD. These are the largest levels. Okay, so these are the ones they really don't want to pay. These other ones are the next biggest levels. But the ones they really don't want to pay are the call up here at 685 and the put down here at 675. If they get above or below those levels, very often we see squeezes or waterfalls. So just a tip on how those levels work and why they're important. All of that is taught in price action training. Okay. Or actually options masterclass, which you can get on the deal over here. You can add it on for $17, options trading mastery, just so you know. All right, we got 1 minute to the open here, so or 13 seconds to the open. So let's get ready. We'd be looking for a call here. Right now, I'm sitting on 681 as a strike. When we do get a trade, we set our strike, in this case 681, and then our stop is 50 cents below the SPY price when we're trading the SPY. So at 680.14, we'll just call it 680 for easy math. If it was at 680, our stop would be 679.50. Opening down here near the pre-market low, but the actual after-hours low. Oh no, that's going to be your pre-market low because they dived it down. Yeah, so we're opening down here near the pre-market low. So we'll have to watch for a potential trend day. I told you I'd tell you how we identify that. So if we get below the pre-market low, they get below it any way whatsoever, and then they come back and test. This red line is the 8 moving average, exponential moving average. Then black is VWAP, and the blue is 21. So if they get below the pre-market low, then back test these averages and then fail back below this price. We got a buy signal here. 177. That's what I got. And our stop is going to be 680.50, 679.50. Excuse me. I'm sorry, 680.50. My goodness. And we got stopped out quick there, 172. Okay, so that moved quick. So we didn't actually lose that much because when I'm live streaming here, okay, so we lost 5 cents on that. When I'm live streaming, it's hard to get all of it quick when the market moves quick because I got to get the stop and everything. So our stop was a little higher than it was supposed to be. It should have been lower. But we'll re-enter that buy should we get it here. That was more of a clerical error on my side. Okay, we got it again, 178, and our stop is going to be 680.35. All right, we are moving so quick here. Okay, so we're going to move our stops to 680.60. And so as we move up to 10% profit, we excuse me, as we move up to 10% profit, we move our stops up. And then when we get to 15%, we move to break even. And then we take profit at 20% for half of the trade. So right now we've moved our stops up once. We're getting ready to move our stops to break even here if they can just get a little higher. All right, they got us there at 169. So 2 very small losers to start here. Nothing too big of a worry. quick moving first bar there. A lot of times we get first bar crushers, so let's see if we get one more chance here to. All right, last bull here, 183. We got one more try here. And our stop is going to be 680.30 again. Or 680.30, I should say. It was 680.35 before. That was. Oh my gosh. 201. Okay.
Order filled. Order filled.
All right, trying to get moving here. If you caught that order filled stuff, that is a challenge I'm trading in on the side as well. So I've got a lot going on right now. I've got a trading challenge that I'm in, as well as doing these trades, as well as running the room. So that was the first one I was able to get a reasonable price on for that one. So I have my normal trades that I trade first, and then I was trying to do that as well. So we'll see how that goes. All right, let's see here. Do you also need VIX UVXY type of non-delayed? No, you don't need that stuff. Bearish pattern forming at the moment. Potentially, yes. We'll see how it plays out. Welcome to the stream, Optimus City. Will, my stream cut out? Sorry about that. Maybe just you. It's because of the advertisements. Oh, yeah. Good thing I'm too slow to trade the open. Will, welcome to the stream. George, welcome to the stream. Hello. In fact, Jacob, it's because you speak at the same time, because I took the signal with the rules and made it to the 20% profit. Yeah, I knew it was going to get close. I got the entry I could get, and I'm trying to do 40 things. It just, it's, on those tight ones like that, it's harder. Kane Asher, why does the indicator keep disappearing and reappearing? Is it best to take the trade after candle close and indicator sticks? No, it is not best to take the trade after the indicator closes or after the candle closes. We have a ton of what I would call one bar winners where we get in a trade, the bar moves in our direction, we take profit, the bar moves back down, all in the same bar, and we make a 10% winner, and the trade never even shows up on the chart because the parameters were met, the trade hit, the parameters failed, and we went back down. So you take it as soon as you see the indicator flash on the 5 minute. Now, on the weekly, we do wait for close when we're doing our swing trades. We do wait for the weekly close because that's a different animal and a much different move. But when you wait for the bar to close, you miss quite often very, very big moves. You know, if you, let's say the sell signal came here and you waited for the bar to close on this big red selling bar, you would have missed, you know, all of this movement. Whereas if the bar, you know, the sell came way over here, but you would have missed all of this movement here. Okay, we get through the 21 and we're very likely to go back up and test the breakdown candle high right here at 683.10 or so, 683.15. But they got to get through the 21 here. By the way, it keeps reappearing and disappearing because parameters are met and then they're not met. So as soon as we see them that they are met, regardless of if it sticks or not, we take the trade. So right now it's on the screen because the parameters are met for the buy signal. If it comes back down in this bar, that can go away. Now, all of those trades are still chronicled in our wins and losses, even though they're not on the screen. We have 2 losses for the day. They will be in our records. Matt chronicles all of that. It's all listed in our day trade alerts in our rooms. Every trade is chronicled for audit. And welcome to the stream, Kane. Prabs, welcome to the stream. JG missed the beginning. Did you say you thought the NQ pullback could get to where you thought? You can rewind. I went back through we're in the middle of trade, so I can't do that right now, but you can go back in the video. Like to see him close a candle up here. Right now you're getting wicks off of this level, and you don't want to see that over and over again. That's a bad sign. That means the bears are rejecting them. Is there a better way to get a better fill price? On phones, it's really hard. It's really hard to get fill prices where you want them. But what I do is, what I do on my computer is I have my trade is up and ready. So when I know we're looking for a buy signal, I have my buy trade up, I have my strike up, and I move my limit. So let's say price is trading at 175 like it is right now. My limit would probably be at 183. And as soon as I see that buy signal flick, I hit the button and usually that 7 cent barrier there is wide enough to get a limit trade without getting crushed by doing a market trade. And very often I get within a penny or two of what I want or where I see the price. And it makes it really hard for me to miss the trade on fast moving trades. As soon as I see the buy, I hit the button, and usually that combination gets me in. Are there times that it moves too fast? Yeah, I mean, we've all seen that bar that opens and jumps 2 points out of nowhere. You know, it's crazy. But most of the time, that gets me in and gets me in pretty quick at a good fill price. Bulls are looking weak here. Lots of wicks. We don't like that. We need them to close this up here somewhere. At least above VWAP. They need to close. They haven't closed anything above 8 or VWAP, so they need to close above those 2 levels right now. Pretty weak from the bulls here. If they were going to really push out, you would expect them to do a little better. Microsoft dragging today. Anybody know why? They're in a bearish formation. I mean, if they got news or something, you can attribute it to whatever you want, but they're in a currently, until they can break back to the upside and break through some support resistance, they are in a bearish setup. Them, Netflix, Meta, all in rough, looking a little rough right now. There's been a rotation out of tech here over the last few weeks, and you're seeing it mostly in those three, but NVIDIA's taken a little bit of heat lately. Have I ever used Hike and Ashley? Kinda. I looked into them just to see what they were because I like to know things, but no, not as a regular thing. My entire approach to trading is simplicity. The indicator is simple. My chart is pretty simple. I don't have a ton on my chart. I have more than I like, honestly. I don't need half of the, or I don't like half of the stuff on here, but I use enough of it that that it's helpful. But I like simplicity. I don't like a million things on my chart. I don't like having to compute 40 different indicators or whatever values or lines or time frames or name it. All of it is boiled down into one simple, easy to use indicator with some key levels and some basic rules. Simplicity is the key to winning at trading, in my opinion. And most traders that I talk to who are successful traders have less on their chart. Bulls have no juice here. As I said, those are all wicks up there at the top. Even though they're small wicks, they're still wicks rejecting that zone. So bears may be able to step on their throats here a little bit. Let's see. Okay, stopped out there. 140. Oof. That was a dumb day. All right, guys, that does bring us into one of our rules, which is 3 strikes and you're out. Now, that means that this buy signal could go crazy, but we're not going to keep wasting money on buy signals that aren't firing. So, unfortunately, on a 3 strikes you're out day, we stop trading because we don't throw money at choppy markets. And we're not going to sit here and try to keep buying buy signals that fail and throw away money in these situations. So, 3 strikes you're out is a policy that goes with the indicator. And it means if you've made 3 trades in the same direction and none of them have worked out, then we don't want to keep throwing money at that trade. Does that mean that they can't blow up here? No, they can absolutely do this. This is what I talked about in the early part of the video. We don't worry about missing market moves. That's just part of trading, and that is part of how trading goes. You get setups, you trade the setups, and you trade them against your rules, and then when they violate your rules, you follow the rules. So we got 3 strikes. We follow the rules. We will not be able to take any more trades today. And it's just a way to minimize a few things. One, it minimizes just your losses on choppy days because you will see a lot of days where this happens and you might get like 4 more buy signals in here that don't work out. It also regulates your emotional side of trading, so it keeps your emotions out of the game so that you don't overtrade. And it just gets you in a better mindset the next day so that you can come back fresh, trade the market, and get clean signals. So not our best day today. That happens. Again, that's part of trading. Losing is a part of trading. Those are things you have to come to grips with. What would it take to get a sell indicator from here? You would need a buy cycle to run through. Right now it's in a sell cycle, so it doesn't need. So when you have a sell signal, okay, we are looking for the market to go down, obviously, but this comes in a buying cycle. So this buy signal is coming up, and this sell signal says, hey, that's weak. It's weakening. We should be looking for a reversal here. And then it said it again here. And then it obviously it did weaken and gave you the reversal. And pre-market's low volume trading, so please ignore these signals. They don't matter. But the point being, when you get a sell signal, you have to run through a sell cycle. So you got to get out of the buy cycle first because you're in a buy cycle still. Then you got to be strong enough in the selling to run through a sell cycle, which they did. Then it looks for weakness in the sell cycle. Now we're still in a sell cycle right now, even though there's a buy signal, but it's a weakening sell cycle, or it thinks it's weakening. Obviously, it hasn't weakened yet. And it's looking for it to reverse out of here off of this key level. So we have a high volume 0 DTE level, great place to trade off of. That's where we're getting our buy signal off of. You got high volume on it. It couldn't get through it. It's looking for this buy signal off of this level. That's exactly what you want to see as a trader. It just didn't work out. Today wasn't the day for it. So to get a sell signal, you would have to run through a buy cycle. So this is still in a sell cycle right now. So you'd have to get a buy signal that works out, and then you could get a sell signal. But right now, you're just going to get continuation of the sell from back here. Did you look at gold earlier? I did not, because typically we don't on this stream. Typically, this is just the SPY trading the indicator. I do that in my midday calls. But you know what? Since it was a quick trading day, we can look real quick. Actually, let me go over here to this chart. So gold, this is the 3 hour. Let's go to a bigger chart. Well, you can look at it on this one first. Gold is either in a little bit of a corrective period here, where we might see something like this, or we'd be looking at this to break out. And given silver and what it's doing, I'd be looking more at this to break out, where you'd have a 1, 2, and then maybe like a 1, 2 here, and then breaking out. And I'd be looking at 420 next. The downside would be the 350 zone. It's going to be the 50% retrace. It's also a gap fill. There's a lot of support right here in this zone. The weekly 21 is also down here for mean reversion. So if they do want to fail here, that's where I would expect them to fail too, and that's where I'm looking to buy. If they don't get down to this level, I'm not looking to buy gold. I already have precious metals. We're already crushing it on it. I took a ton of profit out. We got in at 49 on our fund over here is called EK Wax. On the right side, if you look over here, it's right here, EK Wax. It's at 137.38. I got my people in at 49. So this is where I put my 401k money 2 years ago in April, or I guess 2024 in April. And we've more than doubled it, way more than doubled it, and almost tripled it. Have we tripled it? It's close. Not quite, but almost tripled it, and at the highs did triple it. So, we move our money into places that are getting ready to break out, ideally, and that's what we did with precious metals. And I took a bunch of profit at 340. So we had all of it in there until 340. I was looking for a pullback from 340. Instead, we got it off of 400. Either way, not that worried about it. I'm happy that we did so well on the overall move. But gold, I still think has more legs to it. 350 would be the buying zone, in my opinion. And then from here, I'd be looking at 420 more directly. Hopefully that helps. For an exact, let me get an exact price target on that. 425 is the exact number. All right, guys. Not our best indicator day. It happens. Obviously, you want to do good on the live streams, but this wasn't the one for it. So we will keep our eyes on this pullback, see if the bears can follow through. 6,700 is the level I'd look for if they start to follow through, like if they really start to move. Not today, obviously, over the next few days. But if they can't start to move down today, tomorrow it typically is bullish, so I would look for them to get under 6,800 today. They got to get under that to start the ball to the downside. If they can't do that, then we could see them start to squeeze into the end of the week and maybe hit 7,000 around Christmas time or so. All right. Appreciate everybody being here. Don't forget to grab that discount deal on the indicator. You get the Advanced Elliott Wave course. You get the price action trading, all for $39 a month instead of $59. And you're getting $200 worth of bonuses as well there. So really good Black Friday deal. You won't see anything like this again. Also, if you want to get the yearly indicator, you can see on the screen. If you go to my website, you can put in that code BF25 and get 25% off the yearly, which is 10% more than I've ever given off of that. You won't see that again either. So if you're even thinking about it, guys, you do get that 30-day money-back guarantee. I highly suggest you try to take advantage of that and at least check it out. You know, you get those bonuses, you get to go, you have those, and then if you don't like it, you get your money back. All right. Have a great day, everybody. Sorry it was so short. We'll see you again next Wednesday, or if you're in my rooms, I'll see you at the midday call.